Hey, good morning everyone, and welcome to the PivotBoss Pre-Market Report for Thursday, November 2nd, 2017. I'm Frank Ochoa, aka PivotBoss. Here's a look at the daily time frame of the ES. We got a great trending market in the ES so far. In the previous session here, we did see a little bit of a rejection above the previous month's high. It's kind of an early indication that we could see a little bit more of a pullback here, but you got to be careful anytime you're looking to counter trend fade in a very strong unidirectional market. This market has never been too far off from a new high, but keep an eye on the previous month's close. That dotted line right there, that's 25.77. This is about 25.80. So in this zone here, if there's any rejection in this area and price really can't push through it, we could see a little bit more of a pullback, perhaps as low as recent lows, as price continues to develop between 25.40 and 25.80. Now again, got to be careful, and we got to see how price responds in this zone. At the moment, we were as low as 25.63 half. We've since bounced exactly 10 handles off those lows, so we could be looking at a test into 77 to 80 very soon, and we'll see how price responds in that zone. Again, this market has been very, very bullish, super strong, and you got to be careful if you're looking to counter trend fade. At the moment, any dip, major dip, is still a buying opportunity. For example, if we came down here and tested 25.40 again and started to reject, that would be another opportunity for a swing buy opportunity. So something to watch out for. Here's a look at CL. Now CL in the higher time frame finally reached our 55s. This is something we've been talking about since the beginning of October. I mentioned this return right here could lead us back into 49s, and from that move we could be looking at a push into 54 to 55. We finally got those targets. We hit 55 in the previous session. I think I've mentioned many times how crude oil is allergic to prices above 55. If it gets above 55, it's usually rejected. At least that's been the pattern here for the last couple of years. Doesn't mean we can't see a push through it at some point, but right now you see that we have indeed seen a first rejection, or at least a pullback off those 55s. Now, we see a very narrow range that's starting to develop here, clear support at around the 54s here, just below that level, 53.90. That's going to be very important now. So we're building up here. We could continue to trade in this zone for a little while, but at the moment, the channel here that we've been following could be at a cycle high. For example, we take these lows here, we take those highs there. This thing could see from this high a rotation back toward the bottom edge of this range. 50.90 would be about that target. So that's going to be something to watch out for here. Again, we may not be ready just yet to see that drop. We could be seeing a little bit more build out and development up here, but eventually failure to get above 55 will likely rotate this thing back toward the September 20th FOMC key level at 50.90. Let's take a look at GC here. GC, I've mentioned before, being cautious in this zone right now, but at the moment what we're seeing is a failure to push through new highs. So every time it gets above into a new high, it comes right back. We've seen the previous session here reject new highs and come back. Now we see this one here barely take out the previous session high and back down. That type of behavior usually opens the door to more weakness ahead. And so keep an eye on this range right now. We have a tightly coiled range here. 1, 2, 3, 4, 5, 6, 7, 8, 9 days in this range. It's clearly building energy. So above 1285 would likely run the stops back toward 1300. That could be a very swift move, one of those one-day type of bars where you get a big move. Any failure to get above 1285s, again, could lead to another round of weakness. The next key level down would be the FOMC key level from July 26. That's going to be about 1250.5. So again, right now, we're seeing signs here that highs are being rejected, and that usually leads to weakness, but we have a very tightly coiled 9-day range. A breakout in any direction here could spark the next 15 to 20 handle move, so keep an eye on that one. Here's the NQ, lastly. The NQ here, holding at highs. We had a significant push here off of our 6,000 level. We hit our target at 62.64 half, and now price formed a bit of a rejection tail up there. You can see the signal here pop off right at rejection, right at that target 62.64. You also see right here that orange or golden line right there is the 25% PivotBoss pivot, the R25 level rejection there. And now price is back below the midpoint here. So this is going to be important. It's still building out. It's not really seeing weakness below 6,200 at the moment. And again, very similar to crude, we could see a little bit more build out before we see perhaps a pullback. This looks like a really good pivot high. That's a strong pivot low. And that gives us a clear trading range right there with a midpoint that could bring us back toward about 61.30, 61.50. So again, this is going to be something to watch here. If price can't establish itself above 62.50s or 62.60, then we could be looking at more of a pullback toward 61.50 here pretty soon. So again, this one has never been too far away from an all-time high either. It's been trending higher. But after this cycle high, we could see a little bit more pullback before the next buying opportunity comes into play. So that's it for now. Thank you all so much for joining me yesterday for the monthly market outlook for November. A lot of great participation and great conversation around a lot of great topics. You can catch that at the site and on the Twitter feed. We have the video already posted, so take a look. It's about an hour, almost an hour and a half, about 85 minutes of great content, so be sure to check that out. All right, everyone, let's see how this plays out the rest of the session. Good luck, trade well, and I'll see you soon.